Hey everyone, thanks for joining us today. I'm Megan Coelho. I'm the president of Advice Chaser, and I'm excited to have you all here with us today. Before we introduce our guests and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed financial advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. So we are thrilled to bring you this presentation today. Attendees are muted, but we encourage you to ask questions using the chat box. The presenters will answer those queries during or after the webinar today as appropriate. If you ask a question in the chat box, go ahead and leave contact information as well, so that if we don't get to your question, we can make sure that someone reaches out to you later to get that answered. We want this experience to be as educational as possible, so don't hesitate to ask for clarification or expansion of the material. So now I'd like to introduce today's moderator, who is Rebecca Holden. She is the principal at Hemisphere Investment Management since 2015. She has over 30 years of capital market experience. From 2003 to 2010, Rebecca was portfolio manager and principal at Archer Capital Management in Los Angeles, California, where she managed domestic equity portfolios for individual clients. Prior to that, she was an equity analyst employed by Lehman Brothers in New York City. She followed electric and gas utilities as well as energy companies there. And before that, she was employed as an intermediate portfolio manager for the Farmers Insurance Group of companies as one of 4 corporate portfolio managers. Rebecca was employed with prominent West Coast financial institutions prior to Farmers, and she held positions as a credit analyst, a banker structuring both private and publicly held bond issuances. And she later was manager of one of the largest groups at the bank. In addition to the professional designations she holds, Rebecca has an MBA from Brigham Young University with a double emphasis in quantitative analysis and finance or investments. So Rebecca will be fielding questions from the audience to our presenter today, who is Michael Hart. He is CEO at Hemispheres Investment Management, a global investment management firm he founded in 2014 that manages both equity and balanced account portfolios for individuals. He has over 34 years of capital market experience. From 2007 to 2013, he worked as managing director at Tradewinds Global Investors, where he was a global equity and emerging market equity portfolio manager and a global securities analyst. Prior to Tradewinds, Michael founded and operated Hemisphere Asset Management from 2000 to 2007. The firm managed global equity, fixed income, and balanced accounts for individuals and institutions. From 1989 to 2000, he helped manage the investment portfolios of the Farmers Insurance Group of companies as a senior portfolio manager. During this institutional tenure at Farmers, Michael spent 8 years working as a portfolio manager of emerging market debt investments and 4 years as a portfolio manager of international equities. He helped increase the value of the insurer's international investments to over $1.1 billion from approximately $50 million. He also received awards of merit for generating outstanding returns as a portfolio manager of foreign fixed income and equity investments. So Rebecca, I'll hand it over to you and you guys can get started.
Thank you, Megan. And thank you for attending today. Megan, we appreciate that very nice introduction. As Megan indicated, we are principals at Hemispheres Investment Management. We are both equity and fixed income investment managers. We manage on a global basis. We buy stocks and bonds from around the world, and our investment focus is value. So wherever we see the best value, that's where we buy. We selected this topic today. Both Mike and I have over 30 years of experience in investment management. And what that means is we've been around a very long time and we've seen a lot of things. Investment fraud is a very, very important topic. It is heartbreaking when you see it. It hurts the whole profession. And it was something that we thought would be valuable for you to hear today. And so with that, I'd like to turn the time over to our CEO, Michael Hart.
Thanks, Rebecca, and thanks, Megan, for that nice introduction. And today's topic is protecting yourself as an investor from investor fraud. Having an investment account, whether it's a taxable account, a retirement, or a mutual fund account, that is registered in your name and in which you are the only person with authority to move funds in or out of the account, is a huge step toward protecting yourself from fraudsters. It's when you no longer have control of the funds that you are vulnerable to fraud happening to you. The number one common denominator in criminal investment acts against investors is that investors gave up control of their investment money. Let's take a look at a couple of examples of fraud that have occurred in the past. In 2008, Bernie Madoff was arrested and later incarcerated for running one of the biggest investment fraud schemes ever. Madoff was responsible for creating and managing a $65 billion investment Ponzi scheme in which over 4,800 investors lost an aggregate $18 billion. To invest with Madoff, one would have to take investment money out of their account and move it into an account that Bernie controlled. In essence, you gave up control of your funds. Last year in Singapore, Engie promised investors a steady return of 15% a quarter by investing in the metals market. Xi has been incarcerated for running a $1.2 billion investment scam in which he placed money in his personal account and used the funds for the extravagant lifestyle that he lived. Over $200 million is now missing from about 70 investors. The common denominator in these schemes is investors took money from their personal account that was registered in their name and put it into an account they didn't control. Let me clarify. I'm not saying that all private investment funds are investment scams. I'm not. What I'm saying is if you want to avoid being vulnerable to fraudsters, don't invest in such investments. There are also some red flags to look for as an investor. First of all, control of funds. To protect your funds from fraudsters, keep all investments in accounts that you control. If an investment individual or entity requires you to move money out of your account and into an account they control, beware. Another red flag is the promise of consistently high returns. There's an investment saying that if it's too good to be true, it probably is. In the case of Bernie Madoff, the promise was for consistent high returns, approximately over 16% per annum with no down years. We all know that markets go up and down, and one should expect down years along with the up years. If a person is promising you consistently positive returns, that is a huge red flag. Regarding registrations, ask yourself, is the firm or individuals with whom one invests registered with state or federal securities regulatory authorities? If they are not, that is a cause for concern, as registered investment advisors or investment professionals are vetted by government entities, and in most cases, it is unlawful to charge for investment advice unless one is properly registered. And in a bit, we'll be discussing licensing requirements and how to use regulatory filings to provide you with relevant investment information. Brokerage accounts.
Oh, Mike, we have a question on control of funds, just for clarification. So you maintain control of your funds if it's a brokerage account in your own name. Is that correct?
That is correct.
Okay, thank you.
You're welcome. Brokerage accounts, and I recommend the following. Make sure you're the only person with authority to move funds in and out of the account, as we just discussed. If you have an investment advisor managing a brokerage account, don't give the investment advisor full power of attorney. Full power of attorney gives the investment manager the discretion to move funds in and out of your account. With limited power of attorney, the investment advisor can only invest the funds in your account and not have any money movement capabilities. SIPC insurance. Check to make sure that your brokerage firm has SIPC insurance. One can check whether a firm is a SIPC member through the member database, or you can check that for the telephone number on the internet. SIPC insurance, which stands for Securities Investor Protection Corp, covers up to $500,000 of funds, of which up to $250,000 can be cash in case the broker-dealer declares bankruptcy. This differs from FDIC insurance that governs banks and provides insurance for check and deposit-like accounts for up to $250,000. Finally, compare account statements and trade firms. If you have an investment advisor managing your brokerage account, it is a good idea to check the account value of your brokerage account versus the account statements that the investment advisor provides. If there are discrepancies in value, investigate why there are discrepancies. Licensing. If an entity or individual approaches you about investing, you can check if the organization or individuals are registered with state or federal authorities. FINRA, the Financial Industry Regulatory Authority, is a corporation that regulates the investment finance industry. Any person or entity that receives compensation for providing investment advice must, in most circumstances, register with governmental regulatory authorities. You can do background checks on organizations or individuals by checking the FINRA.org website, of which there's a section on the website titled, in large caps, Broker Check. Broker Check instantly tells you whether a person or firm is registered, as required by law, to sell securities or offer investment advice, or both. Broker Check gives you a snapshot of the investment advisor or investment professional's background and any regulatory action against the firm or individuals. Also, for investment advisors and certain investment professionals of the firm, they are required to submit at least annually a written document, also called an ADD, that describes details of the firm that are material to investors. For the investment professionals providing client investment advice, firms are required to provide investment-related information regarding such persons, including any regulatory information against the individuals. If you are unfortunately a person who has been defrauded, contact local enforcement and report the fraud. Local law enforcement authorities will likely have suggestions on how you should proceed. In summary, the best way to avoid fraud is to keep your money in an investment account that is registered in your name. If you are interested in having an investment advisor or investment manager provide you with investment advice, check to confirm that the firm and its investment professionals are registered with the appropriate entities by doing background checks. Finally, if you use an investment advisor or investment firm, know what they are planning to invest in. And now I'm ready for any questions.
Could you provide the address the website to get background checks and complaints? If there are check to see if there are complaints against your proposed investment advisor?
Yes. You can, on the FINRA, FINRA.org website, in large caps, there's a section called broker check. And you click on that section, and then you can input the name of individuals or firms.
Okay. And there's a question here that says, can you tell us more about the different types of licensing to look for?
Yes. The licensing is for firms if it's either state or federal, depending on the amount of assets the investment advisor has under management. If it's under 100 million, the investment advisor is normally registered in the state in which they are domiciled. If the investment manager manages over 100 million, then they are registered with the SEC. In both cases, the names of the investment professionals who are advising clients are listed on the FINRA.org website.
Okay. And then, let's see, I'm not sure. Let's see, it's follow-up question. What's the difference between insurance and securities licensing?
This is a big difference. Two regulatory bodies that, there's a securities body that regulates the securities industry, and the industry that regulates the insurance is completely separate. And usually that, again, depending on the assets under management, will determine in large part where the individual, the firm, is registered.
Okay, here's another question. How can I tell if someone is talking about an insurance product or trying to get me into a fraudulent investment? I've heard a lot of annuity sales representatives talk up guaranteed returns, etc.
I'm sorry, could you repeat the first part?
Sure. How can I tell if someone is talking about an insurance product or trying to get me into a fraudulent investment? I have heard a lot of annuity sales representatives talk up guaranteed returns.
All right. So regarding the insurance industry, I unfortunately I don't sell insurance. But again, to protect yourself, make sure that the insurer or the representative is registered. And I imagine there's a regulatory body that governs the insurance regulations and registration that's available to the public. We can get back to you on that, because I'm sorry, I'm not as familiar with the insurance industry as I am with the securities industry.
Actually, Mike, the answer to that is there's an insurance commissioner, and they work with a national body of National Association of Insurance, and they come up with rules to guide the insurance companies' activities. And then if the state goes along with those rules, it's kind of it's looser than the SEC, but there is a body.
Okay, thanks for clarifying that, Rebecca.
Mm-hmm. But just one last thing, and that is that annuity products are certainly legitimate products with the insurance companies, and these are large companies. And I mean, if you were defrauded by an insurance company, that actually would be a big deal. And you could go to your state regulator. These are basically state regulated entities, as opposed to investments, which are over 100, as Mike said, SEC registered. I have another question. Investment focus, when you're talking about avoiding investor fraud, you list investment focus. Could you give us a little bit more information on what you mean there?
if you're having someone manage your fund or direct giving you financial advice, you should know where they're planning to invest the money. And with regarding investment focus, there are a lot of different areas of the market you can invest in. It's large cap stocks, small cap stocks, value stocks, growth stocks. And it's a very good idea. It's that you know where the investment firm or advisor is going to or plans to invest your money.
All right. Well, I guess we've covered some good material, and it doesn't look like we have any more questions. Was there anything else either of you guys wanted to add to our little instructional today?
No, just be careful out there.
Mm-hmm.
There's
Yeah,
a lot of
no doubt.
opportunities.
Well, I appreciate you giving us some good actionable material there, Mike. That's really helpful.
You're
So on behalf of Advice Chaser, we want to thank the speakers, Rebecca and Mike. And thank you to our attendees for showing up and joining us here. You can look for an email soon with a link to the replay of this event. And you're welcome to share that replay with friends, family, and anybody you think would benefit from it. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. You can find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we'll see you at another webinar soon.
Thank you.